Joining us now with the key technical issues she's seeing in the markets, Katie Stockton, Fairlead Strategies founder and managing partner and a CNBC contributor. Katie, will all the three averages that we follow, will they sync up? Will we have actual corrections in the S&P and the Dow to follow along with the NASDAQ?
Yeah, I mean, we've already seen a corrective phase unfold, really broadly speaking, and you can see that in the breadth measures, which have pulled back even more, it seems, than the major indices themselves. So it still has been somewhat of an expanding, I guess, tape on the downside in terms of momentum. It's really grown across the board, and that's been a real setback for the S&P 500, of course, down another 2.5% last week, and that brought it below a very key support level of about 4180 in our work. So now this week is very pivotal because you probably recall that we always look for confirmation of breakdowns, and that's especially important when we have an environment like this when emotions are running really high, there's a high level of bearishness in the market, we have extremes in our market internal measures, things like the percentage of stocks above their 50-day moving averages. That's when we need to make sure that these breakdowns are real because shakeouts are really very common. So if we were to see downside follow through or even just kind of staying steady this week from the major indices, that would confirm a breakdown, and that would to us be a bearish development for the coming months.
It would help if we knew about the 10-year too. Are the highs in on the 10-year, do you think, or not?
I think the highs for now are in, at least. We believe there's been a secular shift higher there in yields, and we do look for higher highs and higher lows. But for the first time, and this is as we get into November, some of our very long-term indicators, these are counter-trend indicators, are on the verge of flashing a counter-trend signal in the likes of TLT, a Treasury bond ETF. And there was a countering sell signal in April of 2020, and that's the last signal based on this one model that we're tracking. So what it tells us is that even for the next maybe 9 to 12 months, that perhaps we see more consolidation in Treasury yields. And of course, that could be something that could actually catalyze a better tape. And of course, also the Fed could catalyze an unconfirmed breakdown, meaning a shakeout. So we're glad to have the Fed announcement this week as a potential catalyst for the market to rebound and avoid that confirmed breakdown.
I mean, that would sync up with maybe a slight slowing in economic activity that would allow the Fed to be in a permanent pause instead of we're doing it like meeting to meeting, whether they're going to raise it. We might get to the point where if we decide the highs are in here, we could decide that the Fed's in permanent pause, or at least nothing's permanent, but we won't be talking about it every meeting.
That's right. And I think that consolidation in yields is really just what the market needs to restore some confidence. And valuations, I know, are part of the discussion. But to me, the corrective phase, it's so hard to buy stocks into weakness, but it's often the right thing to do. And we now, of course, have this oversold condition, short-term, intermediate term, really across the board. And those oversold conditions are being enhanced by our counter-trend metrics. So we have this opportunity, we feel here, but we have to make sure that that breakdown is avoided, because breakdowns tend to kind of overrule oversold conditions, and they, of course, would be a setback. The secondary support for the S&P is shy of 3920, so that's another 5% plus below, and it might not be the stopping point if we do see a decisive breakdown here. So it's a really critical week for the market. Bitcoin
just blew through your resistance levels. What's the next resistance level, and where is support at this point after that? What was it, 25% in a week?
Yeah.
Nutty.
It is. It really is. We did see a breakout from Bitcoin, as you mentioned, above resistance. This was based on our cloud model, something that we've been watching for a long, long time. So it's a significant breakout, and it is confirmed. And it puts next resistance for Bitcoin around 36,000. And I don't know exactly what the drivers are. It seems to be related to the ETF speculation around Bitcoin and others. But it looks like a real breakout to me, and it's hard to imagine Bitcoin doing well in a really weak equity market environment. The correlation to the NASDAQ 100 has certainly broken up, but it does show some risk appetite in the market, so I actually see it as a positive.
Yeah, positive for the NASDAQ probably if that's bottoming now. So you're actually, once again, we're dogging and tailing and wacky, but Bitcoin's the dog.
Yeah, and I mean, it's all about Apple, of course, so we have to see how that goes.
Right.
But the NASDAQ 100 is equally oversold, of course, and there are some counter-trend indications. So as long as we really don't have a bad week this week, we'll feel like we have a great entry point, at least with a time horizon of perhaps a couple of months,
so
and perhaps
support,
longer than that.
Oh, I'm sorry. The support on Bitcoin is now what? Is it, did you move that up?
Yeah, so the former resistance now becomes support.
Okay.
So our cloud model, which is sort of a moving target, becomes a support gauge. I think it's around 32,000. But importantly, if you take a step back, it really looks like a basing phase has been completed to the upside. It doesn't mean you rush out to buy Bitcoin. It's still a challenged market environment in a lot of ways, including that breadth that we cited. But we do feel like it's a promising indication. And if we were to also see this breakdown avoided by the S&P, well, then I think we can feel pretty comfortable taking on a little bit more risk, certainly into year end. And then if we get that consolidation in yields that's more persistent, something that could last longer than that. We have some pretty major resistance for the S&P 500 around 4,600. And if it gets through that, that's where our longer term gauges, which are sort of neutral to lower at best, that's where those would start to really improve.
Right. All sounds pretty good. And makes sense in October that things, make a base or whatever. Anyway, Katie, thank you.